Today, we'd like to welcome you for the first at Strathmore University for our media policy webinar meeting. And our topic for today is tax policy and the COVID pandemic impact on business in Kenya. Before I continue, I'd like to introduce myself. My name is Rosemary Okello-Olale. I'm the director of the Africa Media Hub at the Strathmore Business School. And we deal working with business and finance journalists across the continent, whereby we train, we work with various universities on training business and finance journalists. We also deal with the data journalism and data analytics, as well as also strategic communication and strategic formulation and public policy. So before I start the day's proceeding, I want to highlight a few webinar points. A Zoom webinar is our broadcast platform for today's session, and the session is being recorded on our Strathmore website. Our Twitter hashtag before has been always media policy meeting, because this is a follow-up with the policy breakfast we've been having in partnership with a Business Advocacy Fund and Strathmore Business for the last 4 years. And the other one is hashtag SPS. The other one is hashtag BAF Kenya. And because we are honored to have KRA, the other hashtag is hashtag KRA. So we'll make use of the Zoom also Q&A and Zoom chat so that we can be able to have this session to be interactive, the dialogue to be very productive, and also to be actually a knowledge building session. As we all know, the COVID-19 has brought in about adverse effects on not only on individual households, but also on government, but also the way the business owners and taxpayers are working. As a result of the economy turned down, tax administration worldwide have come up with ways to make the situation more manageable by the taxpayers. And as a result, the Kenya Revenue Authority issued 100% tax relief for tax earnings gross below 24,000 shillings, and also the payee rate for 30% to 25%, VAT from 16 to 14, and residents corporate income tax from 30 to 25. But despite all this, SME, which is the hardest affected sectors, is still calling for tax administration to consider more long-term incentives that will present a chance for the sector to bounce back and ultimately contribute to the tax revenue of the economy. In fact, many people, when they are registering to come for this session, the cry was, why is tax KRA not having actually a sensitive way in which to engage with SME and household level? But we are lucky today to have two experts. And for us to actually explain about this subject matter on the tax policy and COVID-19 and its impact on in every household. So with us, we have Mr. Caxton Masundi Ngeiwo, the Deputy Commissioner and the Head of Policy and Tax Advisory Division, Domestic Taxes Department at the Kenya Revenue Authority. Mr. Masundi's tax expertise has been instrumental in the excise tax reform agenda in the country, culminating in the introduction of automation process in the excise industry. He is credited with introduction of Tax Procedures Act and as also Excise Duty Act, and has represented KRA in both local and international legislative reforms forums, including adoption of protocols for elimination of illicit trade in tobacco products, and has held various positions in Customs and Border Control and Investigation and Enforcement Department at the KRA. And we are so glad to have Mr. Masundi with us to actually interact with our participants. The other one is Geoffrey Jenny, a doctoral fellow and a faculty member and consultant and accountant and finance at Strathmore Business School, and has served as the director of School of Accounting at Strathmore, where together with supported team of academic and administrative staff formulated and implemented the school strategy for delivering high quality professional courses, with some actually courses exceeding national and world pass rates. As the director of School of Finance and Applied Economy of Strathmore, where again, with support of academic, Mr. Ejeni has been able to be instrumental in training the BSc students and also postgraduate students. He's also a member of the trainer with professional committee of the Institute of Certified Public Accountants and of Kenya, and also a member of technical committee for finance reporting of ISPAC. So before much further ado, may I welcome Mr. Masundi to actually open the session to talk to us about tax policy and the COVID impact. Welcome, Mr. Masundi.
Thank you, Chair, and good morning, participants. First, I must say that I'm pleased to be invited to make some comments during this important interaction of the various players in this field. As clearly indicated, I deal with policy sometimes. Now, the topic today is about how government has responded to COVID-19 impact on business. And probably the most important thing to start off is what happened. Because you remember when COVID cases were identified in the country, the immediate response by government was to take action to stem its spread. And the effect on that was that some of the business outlets were considered to be areas of risk, and they were shut down. And this included specific sectors of the economy, including the retail outlets for beverages and food, that is restaurants and bars. We had an immediate impact on shutdown of travel within the country and also international. So, and then also we had the impact of consumption in other countries of products coming from Kenya. Because when you shut economies in Europe, for example, the exports from Kenya to Europe, mainly tea, horticulture, and the floriculture industry suffers a lot because the exports in those areas went almost to zero. And the effect then was a ripple effect. I mean, a lot of people are laid off. Also, you had businesses shutting down. So the whole supply chain is disrupted in that case, and you don't have products being consumed at the level that it was pre-COVID. And so the government stepped in and wanted specifically to achieve two things. One, provide relief to business. Two, provide more money to the consumers in the economy, so that the purchasing power that is not significantly disrupted. So that was done in basically two ways. One was to reduce the corporation tax from 30% to 25%, so that there is at least more after tax profit for the companies to continue with operations. Number two was the reduction of PAYE. This is now dealing with the purchasing power. So the PAYE was reduced from, the top rate was reduced from 30% to 25%. And then the lowest bracket, for those who understand how PAYE is taxed, we tax them in bands. So the lowest band was increased from 16,000 to 24,000. Basically means anybody earning up to 24,000 is not subject to tax. And this therefore put more money in the pockets of the consumers. Then number three was also to increase affordability of products available to Kenyans, and therefore the VAT rate was reduced from 16% to 14%. So basically, we also have certain taxes that are specific to small businesses, like the turnover tax. So turnover tax is a tax that is charged on turnover. It is intended to take care of small businesses because it is simplified. You don't have to keep a complex records. You don't have to submit complex returns. Therefore, it is possible for you to account for tax without hiring a tax consultant. And the rate for TOT was reduced from 3% to 1%. And the amount subject to VAT was increased from 5 million to up to 50 million. So basically, in terms of the law, quite a lot has been done to ensure that the businesses are cushioned around this time. Now, from the other side, the non-tax legal issues has been how KRA now has responded to supporting businesses. First, I want to say that the tax authority responds much more positively to requests from businesses to facilitate them at this time. And in order to support businesses, KRA embarked on online engagements. So we are now facilitating most of our processes online. And to do this, we have, for example, facilitated alternative dispute resolutions. We have facilitated discussions on payment plans online. We have facilitated taxpayers making submissions, which we would simply say explaining their tax position on specific tax issues online. And this is all done to ensure that the decisions made by the authority on taxpayers is based on the correct evidence and is properly founded, and the taxpayers are accorded an opportunity to explain themselves. We have also, as an authority, allowed taxpayers who are facing a cash crisis because of the challenges related to their businesses at this time to enter into payment plans. That is, if they are not able to pay all the taxes at once, they can pay over a period in installments. Then we're encouraging taxpayers that have cash flow problems to apply for waiver of interest and penalties so that they are not overwhelmed by this kind of enforcement actions. So, and finally, I would like to say that we have expedited processing of refunds that are due to taxpayers. And late last month and early this month, we paid out a total of about 12 billion shillings. And we are processing another 4 billion to be paid this month, before the end of this month. So, and we have also now commenced processing of refunds for withholding VAT, which has been pending for some time because of system enhancements that had to be done. As you may appreciate, we like to process almost all our transactions with taxpayers through online transactions so as to minimize interactions. So basically, Chair, this is how we are responding to the environment, to the industry challenges at this time. Thank you.
Great, Mr. Caxton. Seems a lot has really changed, and a lot of policies are really been done so that even the public needs to be made aware of the kind of policy direction the government is taking. But what comes out that so much has changed, but we are still living in the old way, though the new normal has come. And the old way means that we still are not financially literate, because if all these have changed, how can the business community be empowered? And this is where I want Jeffrey to talk about ways in which the business community can be empowered to actually understand and deal with these financial and tax issues, because other countries are seeing tax as a development tool. How can we be able to be empowered to see that?
Okay, thank you very much, Chair. And I'm happy also to engage in the discussion. As my colleague from KRA has elaborated a lot about the various measures that the government through KRA is implementing in order to help cushion companies and individuals to minimize the impact of COVID on their business. Probably our main challenge is, even though we have, people have been paying taxes and people are aware about taxes, there's still little awareness about tax matters, because for quite a while, owners of businesses and leadership in companies have been delegating tax matters to be handled by various tax experts, like auditors who have audit departments to manage their tax affairs. And probably throughout the year, only when it comes to filing returns is when companies also engage tax experts and others to assist with filing their returns. But apparently, there are many avenues through which business owners and companies and other individuals can learn about tax matters. For one, KRA itself conducts a lot of tax awareness and sensitivities and workshops. And through various affiliations, from federal, Kenya federal employers and others, various organizations learn a lot about tax matters. Through the KRA website, also people can learn more about tax implications in their businesses. And quite a number of courses being offered by different individuals, professional associations. For example, the Institute of Certified Public Accountants has an avenue through which its members and also others who are non-members can learn about tax matters. But all in all, this is a point at which it's very important that all business owners learn essential aspects of tax matters. They're not very difficult, by the way. So what is critical for many business owners is to understand, first of all, why the government has to tax. For example, even though we are facing the pandemic at the moment and everybody wants tax waivers and not to pay tax, we also expect the government to provide essential services. You need health workers to be paid. You need the police to provide security, because again, when you have many people who are not working, there is probably a high risk of insecurity. So you still need a lot of essential services provided. And what organizations are looking at is not necessarily to have all the tax not paid, but to enable organizations pay tax that they can afford, and also, in a way that they can also manage. For example, you manage your cash flows. But all in all, in terms of tax matters, the critical thing is to know how much tax, which kind of tax you are supposed to pay, the kind of records you're supposed to keep for tax, filing your returns, the dates when the taxes are meant to be paid. In case there's any tax dispute, then how do you go about resolving the tax dispute? And then we also have what is called advanced tax matters, which revolve around how do you manage your transactions in a way to minimize exposure to tax, not evade, because evading tax is illegal, but how do you carry out transactions that expose you less to tax? So for example, some businesses talk about opting to lease, say, some equipment, as opposed to owning the equipment, because you may have some tax benefits of leasing. And then in case you have errors or issues with regards to tax, what kind of advice do you need to get? What penalties you may face in case of lack of tax compliance. So all these are very important for all business owners and even individuals just to be aware about their tax status. So thank you very much, Rose.
Thank you, Jeffrey. That's very well put, that business owners do not expect not to pay taxes, but tax that they can be able to manage, but also they need awareness. But this is why actually this dialogue is very, very critical. And Mr. Caxton, what is coming, that anytime the government actually read its budget, there are new things that always comes that make the business owner wants to run like as far as possible. Like now the reintroduction of the digital tax, tax on the digital economy, considering that COVID-19 has made most business to go online, and especially this a new normal that SME are adapting. So how can the tax burden be reduced to encourage the e-commerce in this area?
First, I must say that as it were, no tax was no business was exempt from taxation. Taxes have always been there. But what government is doing is to simplify taxes for certain categories of people. Because you can see that the way online trading is done is quite different from how the other trading is done. And then number two, you also realize that it is a sector where businesses can be done in one country and the provider of the business or service is resident in another country. So the question has always been, those who are resident in Kenya are saying, we are accounting for our taxes. But these other gentlemen or the other businesses that are operating from outside the country, offering services in Kenya, are not paying their fair share of taxes. So the local ones felt a little bit outcompeted because their products were more expensive than those offered by companies outside Kenya. So they have always been lobbying government for fairness in this sector. And therefore the response for government was to provide the digital service tax at 1.5%. And for foreigners, it will be final. For local companies, they could still offset it against their profits at the end of the year.
Okay.
So the question then you're asking is, how does government help? I mean, we are helping even by introducing the digital service tax also. It was a way of leveling the playing field and ensuring that foreign companies offering services in Kenya through digital platforms also pay their taxes.
Thank you. I just saw there are many questions coming in that area then. How can the SME, as they are entering, be actually considering this digital economy in the new tax policy that you've introduced?
I beg your pardon. I didn't.
The SME. How can SME be actually made embrace this new digital tax that you've embraced? As for example, an ordinary woman in the open air market wants to actually sell her products in the e-platform, and she's being asked to tax. How can she be able to actually embrace this new mode of taxation in the digital economy?
Digital economy is basically a way of trading. For us as tax, when you interpret it in terms of the tax law, what it only offers is a different way of doing business. But except that it introduces something very interesting, that a person outside Kenya can do business in Kenya without actually being in Kenya. So long as you can support a payment system that can give them a remittance of money paid for the services rendered. So the other rules that apply for taxation still apply even if you were to do your businesses online. For example, if you are a small trader and you operate, online, and your income is not anywhere close to what we are referring to as the thresholds here for taxation, it's still, those rules still apply to you as well. So I think, like you said, there might be need to do much more sensitization about how these taxes are applied. Because if your income is less than 100,000 shillings, it won't attract VAT. We don't expect it to attract any of these other taxes other than the income tax, which is individual income tax. So basically what we are saying is that the rules of taxation don't change because you have changed the platform. And that's why you can see, for those who are trading on the platforms, at the end of the accounting period, if all your business is done through through a platform, at the end of the period, you are supposed to still file an income tax return. And in that return, you are going to declare your profits. And what you had paid to the authority as digital service tax becomes like an advance tax for you. So that is for local. For foreign, then it becomes a final tax. So the rules of taxation have not been changed by the introduction of digital service tax.
Mm-hmm.
Yes.
Everyone, there's a question from James Asonga. What are some of the feedback mechanism on the KRA measures that KRA has put in place for COVID-19?
First and foremost, we have a layered approach to getting feedback. The first feedback methodology we have is to get feedback from representative organizations. So they write to us, Kenya Association of Manufacturers, KEPSA, and all the others, the consultancy firms. They usually become our first line of response on issues of taxation, especially on policy and the much more complex issues. We also have open lines for taxpayers to write to us as individual taxpayers, raising particular issues, including issues relating to policy and processes and technology, when it's about facilitating them to transact with the authority. So, and then we have forums that we usually organize. For now, under COVID, we are allowing discussions like these ones. This becomes a feedback for us. So in as much as you have asked me to come and make some comments, I'm very keen to listen to what the taxpayers are telling us in relation to the new policies or the way we work. So I would like really to encourage the participants to speak back to us on what they think is important, what is affecting them, where they think we can actually improve. So we've done quite a number. I think ever since COVID started, we've done almost 50 engagements with the taxpayers through forums like these ones. So this is how we are responding to taxpayers' queries at this time.
Great. Maybe Jeffrey, you can comment, dealing with a member of ISPAC and also academia and dealing with the students. In your class discussion and also as a taxpayer, the KRA mechanism, are they actually mechanism that taxpayers can be able to identify with, and what is your view on that?
Okay, thank you again for the question. I think from a layman's perspective, we need to understand that when it comes to tax matters, there's always the certain fears associated with tax. So this probably will be more visible when you're facing a situation like COVID, because at the moment, what many organizations are worried about is the ability to pay their taxes, and they're looking at various tax concessions. And I think in a way we can say that that discourages some element of communication between the taxpayer and KRA. But on the other hand, if you check within KRA, the website itself, they've already set up a page where they're engaging with various taxpayers and other stakeholders on matters of tax. And I think KRA is also open to getting feedback. I think like our colleague Caxton has said. In addition to that, various professional bodies are allowed to provide their views with regards to the tax policies and measures that the government is putting through and being implemented by KRA. For example, in ISPAC, we have a separate committee for tax policy matters, tax and public policy matters, where the views of ISPAC that they collect from members are supposed to be channeled, and they also inform the discussions around setting up budgets and also the tax implications of matters. Just to let you know also, the tax on digital services and provisions and others, KRA has already issued a request for members and other taxpayers and all other stakeholders to give their feedback in order to be able to address the needs and concerns of businesses. I think like what Caxton has said, the question is, okay, for quite a number of people doing digital business, definitely is, a lot of people have not been paying taxes on that. And I think KRA has, through the government, has also discovered that it's an avenue upon which you can put, you can implement some tax measures, and you can widen the people who are paying taxes. Maybe just to clarify here, if you look at how people conduct business in maybe in a very small market, you'll find that taxpayers pay some little tax on trade, or just to conduct trade license, maybe a small license fee. Maybe Matatus had that advance tax that you pay for you to get a license. So here, I think the question is, we're trying to apply the same to make sure there's uniformity, so that whether you're doing tax online or in a physical way, at least everybody has that fairness in terms of paying taxes. So I think KRA is trying. For me, I think they've tried all the measures. Maybe the most important thing now is to make people more aware. The issue of being sensitive, and also encouraging people to discuss tax matters openly, and not necessarily to involve people more on tax matters when there's a pandemic, because also, what is paining people during the pandemic is slightly different from when the situation is not.
Hold the thought of KRA asking the taxpayers to give views on the digital tax, because people would like to know how can they engage with KRA on that. There are questions still coming in. There's a question from Mildred Ngesa on how can KRA cushioning taxpayers who find themselves in tax quagmire because of lack of jobs and thus inability to sustain paying taxes, contrary to how they were doing at the beginning of the year. Is there a penalty on that? Caxton, to do that, and then you'll be able to come out with your professional angle.
Yes, where a taxpayer finds it difficult to pay taxes due to cash flow arising from business challenges at this moment will always be allowed to apply to the authority for two things. One, we can allow them settle the outstanding taxes through installments, so they have to enter into a payment plan. Number two, they can also be allowed to apply for waiver of the interest and penalties. So basically two things. So not only waiver of penalties and interest, we can also allow you pay in installments.
And on that, now a question from Elkanah Towet. The private sector that face financial challenges, what adaptation measures can they take, and what is KRA obligation on this?
I don't know whether that is a question for KRA to answer.
Yes. Yeah. Because of the challenges.
I don't think that is a question for KRA to answer. I mean,
Yes.
Well, for us, as an authority and also as a government, is to ensure that the burden created by the COVID-19 impact is lessened. And that's why the government has taken all those measures, basically to put more money back into business through reducing tax rates, and also put more money into the pockets of consumers to spur consumption. So I think in terms of responding to that question, that is what the government has done. Now, how the companies or the businesses try to fit into this new environment, how they try to survive, it should also be on them, I mean, to come up with those additional measures.
Jeffrey, do you have any ideas on how the private school can survive during these tax period times?
Okay, yeah, so I think like Caxton has also hinted, I think, well, I think when you have a pandemic, it's also good to appreciate there are many complex matters here. Just give you just a hint on how the situation can be very technical. For many emerging economies, okay, even quite well developed countries, the major source of income for the government is usually taxes. And then because you want to raise money in order to spend on critical functional areas of the government, you'll find that the amount of taxes you're raising is much lower than the expenditures that you must incur. So, for example, in Kenya, if you look at the last two budgets, there's something we've been talking about, a budget deficit. So a budget deficit simply means that you want to spend nearly 2.8 trillion, and maybe you can only raise, say, 2.3 trillion, which substantially part of it is tax. So you have 0.5 trillion in a budget deficit. That requires you to borrow from different sources. Either you go back to the public, issue treasury bills and bonds, or you look for donors and other people to support the budget. Now, if you look at the situation of COVID, if you're relying a lot on taxes to finance your critical expenditure areas, even you as a government, you'll be hit. So for example, I think when we were heading to our second and major lockdown, when the president was announcing the additional tax incentives, the government said is estimating to lose about 200 billion in tax incentives. Now, on the one hand, the government is still worried about providing critical and essential services because everybody wants a service. But on the other hand, also, businesses are suffering because when you have a pandemic, it affects your business model. It affects the way you're able to do your business. And your major areas of business are affected, especially financial performance, from profits, from cash flows. Your customers are not paying, or if they're paying, they're struggling to pay on time. Your ability to pay your outstanding amounts, the dues, your suppliers and your employees and salaries, that is also affected. So therefore, business, tax incentives cannot get you out of business challenges. They can only minimize your profitability and cash flow challenges and even liquidity problems. It can only minimize that. So what you then need to do is you need to identify new ways upon which you can make your business thrive in times of COVID. And I think within this forum, it's a bit difficult to exhaust all strategies that you can have in place. But I think at the moment, there are many webinars and functions and meetings where people are discussing what is the best way to move forward. So for example, quite a number of, organizations are now thinking of benchmarking on leveraging on online, doing your business online, which again is going to attract some small tax on the other hand. So in a way, you will have to find a way to make sure that your business is thriving through a lot of strategies, looking at what incentives are there for you to do business, collaborations. Maybe there are certain businesses that will be completely wiped out by COVID. COVID will prove to us that they are no longer relevant. That's not your business. There are businesses that will have opportunities, new opportunities to see how they can deliver value to their customers. And again, COVID might prove that you may not need all the resources that you're having now to back your business. Maybe you can become more efficient in the way you run your activities. So tax incentives are just a very, very small component of helping you to survive, but definitely you will need to start being strategic and visionary and innovative in how you're going to add value to your customers. You need to rethink moving forward. Is your business relevant in this time and moving ahead?
Okay. To Caxton, we are only remaining with 10 minutes, but there are still many questions coming in. From Martin, there are concerns about the imminent increase in a wide range of goods on increased excise tax. How is the excise duty going to be implemented or adjusted? And then from Juliana O'Malley, Temi, with the digital economy gathering the tax bracket, what are the likely scenarios to youth and women-led startups? What should youth, women, or vulnerable groups, or especially people with disability, or be able to do? And alternative media, as also the media is being actually impacted by this COVID. What can be done in this area? Caxton.
First, I must say that government responds by providing relief, and you can see that there has been relief, for example, on loan guarantee schemes. There is a tourism fund of 2 billion that was introduced. There is about 170 billion in terms of tax relief that was given to support industry at this time. But it is important for us to make one very important point here. That taxation or tax relief has never been the most critical basis for making investment decisions. In fact, studies done indicate that tax reliefs only takes position 11 in terms of weight in making decisions on investment destinations. So even if your taxes are zero, there is no guarantee that investors will come if all the other factors don't add up. And some people have always given the example of Somalia, for example. Supposing the taxes in Somalia is zero, how many people are still willing to go there? So you can see that there are other factors that determine investment decisions. So excise taxes are supposed to be reviewed every year, adjusted upwards by inflationary rate. So that comes around October. However, it's important to note that for some years, you've seen the government has actually, considering the environment, not adjusted those taxes upwards. You remember there is a year that the government kept it at zero because there was an increase, and then the minister used his powers to lower it back to where it was. So these are considerations that can be made at such kind of times so that we do not make a bad situation worse. The issue of digital service taxes, I want us to look at it from a much more positive perspective. One, it's important that everybody pays taxes anyway, because it's the only way you can make a direct contribution towards the development of your country. And without these taxes, even the services that we require to revamp businesses will become very difficult, because businesses interact with the government, they interact with government services, they need access to markets, so they have to be on roads, they need power, they need all these kind of services. And for that to happen, taxes have to be paid. The most important question has always been the convenience of our tax regime. And the question has been, how convenient is it for people to pay taxes in Kenya? And this is where the tax authority has been working, overdrive to ensure that we facilitate our taxpayers. And that's why we are introducing even much more simplified forms of taxes. I mean, of accounting for taxes. We are now taking our tax services from the computers, which has been where we have been for 5 years or longer, and now we are taking them to phones. So, for example, if you go to if you have an Android phone, you'll find that there is an app that KRA has launched. If you download it, it will allow you apply for PIN. It will allow you pay presumptive tax. It will allow you pay turnover taxes. It can also allow you make queries and file what we call nil returns. So this is the issue really. How complex is our tax code? Is it too complex for people to do it? And what we are trying to do also is that we are trying to limit the cost of accounting for taxes by simplifying them and having individuals file taxes without support from the tax consultants or tax agents. So these are some of the things that are being done to lessen the burden. Great.
I'm coming back to you, Geoffrey, for your final comments because we have 5 minutes to go. You said that taxpayers should come with new ideas on advising the KRA on ways they can actually enhance digital economy through the introduction of these taxes. And this is becoming the new norm. What are some of the suggestions? Can you especially, I want you to look at that ordinary person vis-a-vis that multinational organization. What are the ways in which digital tax can actually apply for him or her to enhance their economy within the e-commerce?
Okay, so I think if you look at it from a very broader perspective, I think in a very if we are to put it in a blunt way, what COVID has done is that COVID has made us now think on how to conduct, to move on to digital platforms. Of course, if you look at digital services historically, there are a number of organizations that were able to look ahead. The Amazon, for example, in terms of buying goods, even Uber, the app itself is supported digitally. So I think in a way, for many of us who have been staying away from guiding our service digitally, I think now COVID has just proved to us that it's the line that we need to start thinking about. So I think for me, what I'll assume is that most organizations now will have to leverage somehow on technology and also just engaging their clients and customers. And that's one of the best ways to try and survive. Now, if you look at the government has also implemented a lot of digital services. Please remember that we have the e-citizen where people apply passports, driving license, and you actually access many of the government services digitally. So in a way, I think the reality is that we must embrace technology and the way we're going to do services here. So in a very specific way, when KRA is engaging various stakeholders on then how do we tax the digital services, then we will have to look at many dimensions. All right, so first of all, you'll have to classify the services. What are they? Are they essential services? So for example, recently in a WhatsApp group, I saw members congratulating a doctor who has come up with a an app that enables doctors diagnose and prescribe medicines. So in a way, you don't have to go to hospital unless you need an examination. So the question then will always be, what the digital services, can we classify some as essential while others maybe are purely for profit making? And then from there, for those that are profit making, who are the people who are conducting that? Okay, are they companies? Are they individuals? And in terms of individuals, who are these people? Are they still schools? So for example, the government has not been taxing school fees. And so if schools and universities are going to do their services digitally, then the question is, do we still tax school fees that is being offered online, okay? So I think there's scope to discuss a lot more. And if you look at also some of the incentives, if you start a company that involves exporting goods, like in the EPZ, you have nearly 10 years of amnesty. You don't pay taxes. So does it mean that also if you are offering digital services, exporting your services to other countries, should you be taxed, or are you still eligible for tax amnesty there? So I think for me, there's room to engage and discuss, and is not cast in stone. So all we're doing is that moving to a digital platform does not necessarily mean that everybody will have to pay their digital taxes.
Now our time has
secondly,
come to
they should
an
file
end.
returns, yeah? Yeah.
Thank you, Jeffrey. Mr. Caxton, everyone wants you to come back and further explain about this tax and citizenry. And so as we close, can you actually explain to the public watching here and also the participants why people should be actually afraid of KRA as opposed to embracing KRA, because there's a kind of a concern coming in that these are time that KRA should not be sending reminders, because people are already going through so many traumatized experiences with the COVID that you need to pay your tax. But can KRA find ways and means to engage citizens, because we are partners in this together, and it's that citizen that's going to make KRA become a successful institution by actually collecting taxes. So what are the message you give to ordinary person when it comes to tax policy, and how this tax policy be simplified so that auditors don't actually also cheat the ordinary people who don't understand facts and numbers? The other thing is that how also can KRA be able to engage once in a while awareness creation with the public? So I say that actually this is what we did last month, this is what we're able to achieve, and this is how we're achieving it, and this is where we want to go. Caxton.
Thank you, Chair. I first want to, as an exit, I want to thank you for inviting KRA to make comments in this meeting. I know that in some instances, I believe not now, but if it is still there, it's an engagement we'd like to get, that some people fear the authority, fear KRA. Nobody should fear KRA, actually, no one. As long as you're a responsible citizen, actually you should be working much more closely with the KRA to ensure that you do not make any errors in accounting for your taxes, because if you make errors, then it has an impact on you in terms of penalties and interest. However, I would like to say this in terms of KRA. KRA is a very facilitative institution, and we have put in place a lot of measures to ensure that the taxpayers not only get the right information that supports them in determining their tax liabilities, but also allow them to make queries and inquire about how best to handle their taxes. The office I head, the Policy and Tax Advisory Office, is an office which provides free services to taxpayers in terms of understanding tax law, interpreting tax. And what we do is you write to us, we will answer your questions. We have also a call center that deals with procedural issues and less technical matters. If you ever ask them very difficult questions, they will still come back to you. We have a backup team, technical team, that provides them with all the support in answering taxpayers' queries. So we have put in place facilities to ensure that taxpayers speak back to us. They raise their issues and we respond to them. So number two is that we also run taxpayer education services. For this time, we are also learning now to use digital platforms like these ones to speak to them. We used to have meetings, call them for conferences, both general for new taxpayers and specialized ones for certain specific sectors. So we used to call them for meetings. And for now, we are shifting to digital because, you know, the guidelines given by Ministry of Health cannot allow us to assemble them in one place. So KRA is an institution that is providing a service. What people have had in the past is people who don't pay taxes or people who know they have evaded taxes feel a little bit uncomfortable to talk to KRA. But even where you have not paid tax, you are still going to be treated well when you disclose the taxes that have not been accounted for. And you'll notice that now the government has even gone ahead to make it law that when you disclose taxes that have not been paid, then you have the right to enjoy waiver of penalties and interest in the criteria that they have given. So these are all ways of ensuring that the taxpayers really feel supported in terms of payment and accounting for taxes. But also, you can see some of the measures we have taken in automating our processes so that you do not have to come to KRA to pay your taxes. You can account for your taxes initially in your office, at home. Now we are even allowing you to account for your taxes on the go, because a mobile phone means you can pay taxes while you are in a matatu, where you are driving to your office, so long as you feel that is the time you really want to transact tax issues. You can simply log in to your mobile phone and account for your taxes there. So a lot of things are going on, but much more important, as I believe, is that
no, we've been actually given few minutes, and as you leave, you can also answer why are you taxing pay retirement package? Then I'll have 2 more questions.
Well, probably it is just important to note that the money that is paid out during retirement is money that was deducted while you are earning that money, for all the time you are working.
And you already pay taxes on it?
No, those contributions don't attract tax at that point. So it is just attracting it at a later date. So every income that you earn is supposed to be subject to tax. So it's a practice that most countries do. They defer the taxes on that part of income that is contributed to retirement, to the retirement fund. So the question you make, so it is just a delayed tax.
Great. So the final one, people would like to know the payee tax, what it means for the ordinary person, the customs tax, the excise tax, the VAT tax, and the other one now you've brought in the digital tax, which you said some percentage. So give us our percentage payee, what is it, and percentage that is going to attract customs tax, excise tax, VAT tax, among others.
Well, that is a whole thesis. Basically, taxes are broken into 2 categories, if I may just summarize. You have what we call direct taxes, which are taxes on income. And then you have consumption taxes, which are taxes on goods and services. So income taxes are basically taxes on companies and taxes on individuals. Taxes on companies is what we call corporation tax, and that is where the tax rate was reduced from 30% to 25%. Taxes on individuals is what we now call PAYE, pay as you earn. And for this one, it is graduated, means that anybody who earns less than 24,000 will not pay. And then the highest income bracket earners in this category will be charged at 25%, which was also reduced from 30%. Then you now have all the other taxes, like for example, you have withholding taxes. This, when you hear about a withholding income tax, for example, if it is for a resident person, then you know that in some circumstances they are treated as advanced tax, which means you are allowed to offset it against your taxes computed at the end of the year, when you are now accounting for the full year income. Then you now have what we now call consumption taxes. The major consumption taxes are mainly VAT and excise taxes, which are chargeable both on goods and services offered in the country and also on imports. Now, excise taxes are charged according to the type of goods, so the rates are different. The highest rates usually are on alcohol and tobacco. The lowest rates are on other on beverages which are non-alcoholic, like the juices, water, and soda. For example, currently, the excise duty on water is about 5.4%, and 5.4 shillings per liter. And then juices is about 11 shillings per liter. So basically, this is charged on when goods are sold or when they are imported. Now, customs duties are taxes charged on imported goods only. So if you manufacture that product in Kenya, it will not attract customs duty. So these ones are also different, but they are basically broken into 3 categories. Raw materials will probably attract 0 rate because they are goods imported for use in Kenya. Then we have a rate for intermediate goods. These are goods that have been processed, but probably not concluded. So they attract a medium rate of about 10 to 15%. Then we have a rate for finished goods, which is usually around 25% or higher. So basically they are in 3 major bands. So if you are importing something that is completely made, like clothes that you have, you know, the ones we wear, they are already ready-made, they call them ready-made garments. Those ones will attract a higher rate. So anything that is coming as a raw material takes a lower rate. Anything that is intermediate takes a medium rate, and anything that is higher. But also, there are specific exemptions that are provided, because that is now another whole regime of explanation that can be made. But these ones are mainly targeted at either promoting certain sectors which have had a very negative impact or require government support, and also targeted at certain individuals in the economy that are considered to be disadvantaged and require government support, like the disabled persons. They are allowed, for example, to import a vehicle duty-free, import certain equipment that are necessary for those facilities duty-free. And this is where you also get supplies, for example, to hospitals, certain specific supplies also being duty-free. So basically, that is a summary of the tax regime.
Great. People are saying actually they'll need more engagement to be more made aware of the tax regime so that they can be able to positively identify with KRA instead of hearing KRA and they want to run away. And so
there's no reason to run away from KRA.
Yeah, and this session has really been very, very thought-provoking, very encouraging, but also it has really interpreted a lot of things that we didn't know, and especially when it comes to tax policy. And I agree with everyone's sentiment that engagement with KRA, especially on such platform, also face-to-face, will be critical. And as Strathmore, we'd like to thank you for availing your time to come and explain to the people about this tax policy in such a time when people are facing a pandemic. And we look forward to engaging with you and your team more. And Jenny, thank you for availing yourself for being with us. And for our participants from various parts of the world and for the various media houses, this is actually a process following up what we call media policy breakfast, where policymakers come and engage with our journalists on thematic issues such as tax policy as we are today. And we look forward to engaging with you more, either on this platform or during a breakfast meeting. And we thank Business Advocacy Fund for being our partner for the last 4 years in actually making this viable. Thank you everyone. And we shall actually connect with all of you and send you the recording of this session. And your questions that some of you have come late, we'll make sure they're answered by Mr. Caxton and Geoffrey in our final report. And thank you. Welcome again to be with us. Strathmore hosts various webinar meetings such as this. This week we'll be having more than 3, and please be on the lookout for such webinar meetings.